Thank you very much for your patience, guys. We battled our way through the technical challenges of the day. This is the nightly strategy podcast for October 13th, 2020. And God willing and the river don't rise, we're going to get through this. All right. Let's take a look at the daily health check. So, yesterday was a big, strong gap up and push to a new 10-day high out to Z2. Today was a consolidation day. There was no gap. It sold off and then had a slight rebound at the end to close at about Z1.5, or basically right at the previous hump of the dragon. So it's holding support where it should support if it wants to continue to go. It did not panic sell off today, so that's a plus. So we're looking at support levels at the low of the day of 349-ish. Z1 at 346. The skin, the spine, and the lower skin of the dragon all the way down to 338, which is also the Bollinger Band mean. You can see the extension of the RL30 is still very positive and strong, as it was over here when it had the last time that it achieved these heights. So this is about as yin-yang as you can get, with the center line of the Bollinger Band mean really being the middle of this entire 30-day trading range, as you know, mathematically that's true. Tomorrow's PSAR will be at 335. Today's PSAR was at 333. The 10-day low is at 331. Z-1 at 329 3/4. We saw the PSARs already. Fair value down here at 324.5 just is now above the maximum adverse excursion of the RL10, which was that RL10 bellies at 323, just above Z2. And then the 30-day low, which will be in play for about another 10, 15 days at 319.7. So to the upside, all that we really need to do is get through Z2 and the 10-day high at 354, and then there's another leg up. Then the 10-day high at 358 3/4, which is also the, that's the 30-day high. That would be the peak of the previous excursions. And then Z3 would be in play, followed by the peak Z3, and after that it's the wild, wild west. So this is still a very optimistic move over the last 12 to 15 days. This little sell off was not much. It it just barely. It didn't even get to the baby dragon, and the RL10 basically just slowed its roll just a little bit. So we got a couple days of possibilities here where if it recovers and takes off, then that's going to look like a very favorable, a continuation of a favorable move. Let's look at what happened in the sectors today. So the S&P was at minus 0.65. We had the Russell minus 0.67. Looking for the diamonds. DIA, where are you at? Okay, there's DIA. Slightly better at minus 0.6. So today, all three of the U.S. indices were really kind of tightly clustered around that minus 2/3. Treasuries, on the other hand, did finish up, I should say, here at 0.7. So today was a defensive, money moving to the defensive sectors. The sectors that did better than the S&P include technology, marginally better. I mean, it's a 100th of a percent, so not much difference. Emerging markets minus 0.4. Wheaton Precious and Japan minus 0.3. The Fangs minus 0.12. Clean Energy basically flat. Then oil and volatility up 1.37. So the big winners today in terms of the the companies, with Virgin Galactic plus 6%. Some of the alternative leaders, the non-tech leaders, Walmart, Home Depot, Alcoa, Microsoft, and Tesla, the first two real tech players that we see, followed by Google, Nvidia, Amazon, all basically flat for the day. Even our triple techs, here's one that was flat, and then TECL was marginally down. Okay, let's take a look at the symbols that underperformed. So we have healthcare, healthcare basic materials, and Brazil from minus 0.76 to minus 0.9. Have Mexico minus 1.32, starting to get bad now. Down here with the XLE minus 1.5, and here's the other triple tech at minus 1.6. So the broad tech index was down significantly, whereas the triple techs in the TQQQ was basically flat. So that's the first time we've really seen that much of a divergence between them. So the NASDAQ 100 triples were flat, but the XLK triple TECL was minus 1.8. Energy and oil exploration minus 1.9 and minus 2.3. And you've got commercial real estate and silver down 3.2 and minus 3.6. And then so there was a real split on some of the tech. So you saw some of the techs like Microsoft and Apple gaining, but here, Microsoft and Tesla gaining, but here you got Twitter, Apple, Cisco all down pretty large for the day, and then Devon Energy, the worst in our stack, at minus 3.65. The intraday trades I want to cover were Kata 2. Really, it was Kata 1, 2, and 3 today. So here's one in Virgin Galactic SPCE. And so you'll recognize this one as Kata number 1. So we have that harsh sell-off. Then we have the RL10 bottoms out, crosses the baby dragon, winter turns to spring, the RL10 crosses the dragon, RLXD, the PSAR flips, we buy the breakout as it crosses the VWAP in the usual way, we put our stop at the belly of the RL10 and the PSAR flip, and that's basically about a 25-cent risk box on a $20 stock, so that's about a little over 1%. Right? We use the Wu Wei exit. We wait for 1, 2, 3 dots above our entry. On the fourth one, we spring that up here. We wait for the Bollinger Band mean to catch up, play the Bollinger Band mean, and we take our routine exit at the crossing of the Bollinger Band mean here. This is the indicated second position, and this is where this is not only Kata 1 but also like Kata 2, the supported fall crossing, and I want to just highlight that for you. So I want you to notice the belly of the RL10 and the higher belly of the RL10, and when the previous peak gets taken out, then that's a tell that this is now kind of free and clear. So if I was going to put the markers on this thing, I would observe the swing low, then I would observe the swing high at 2, then at 3 we get another reversal. In this case, the reversal of the RL10. 3 is higher than 1, so this is like a leg up. It's finding a higher support level. Now, this space in the middle between the line at 2 and the line at 3, this is the pocket in here at 4. And that is perfectly legitimate place to make an entry. So if I don't have the entry already, I could put an entry in at 4, and then this would be kata number 2, the supported fall crossing, because we've seen a the harsh sell, we've seen the rebound leg 1, we've seen a pullback and then a reversal once again in the direction of this move from 1 to 2, but with a higher low. And so that allows you to buy it north of the dragon inside this pocket. Because I already had one position in, and because that looked like resistance from yesterday, I waited for it at 5 to actually clear the previous Z3 and the hump of the RL10. So I put my second entry in at 5, and then meanwhile, we're just there we go. So my second entry is here at 5. This on a better day, I should have, I think, exited here. I was trusting the Bollinger Band mean because second entry was already in the money. But I wouldn't be offended by an exit here because you've seen 2 horns of the dragon beyond Z2 and it's pulling back. That's not an unreasonable exit. I was committed to the Wu Wei manager exit. So this recovers, continues to push higher, and now it comes back and crosses the Bollinger Band mean where I take the routine exit. So that's about, if that's one risk, this is about 1, 2, call it 3R on the first position, and probably 1.5 to 2R on the second position. So that's about 4 to 5 execution R. And that was... So that's a combination of kata number 1. So kata number 1 is the supported spring crossing. Kata number 2 is this move that has a low, a high, a higher low, and then you buy it and it crosses the RLXD here at 4. And then what you're looking for is a decisive move through this resistance level at 2. Now, we're expecting that to happen, or we're not surprised when that happens, because there is buying pressure in this move, as evidenced by the fact that it's had a nice strong move off the bottom. It held support at a higher level and the buying resumed. So we're not surprised when this thing springs forward. But this is that first critical piece of resistance. So sometimes I'll put that second position here at 4. Other times I'll do like I did today at 5. The rest of the market was not really working well. And so I was more hesitant to put the entry in at 4 on Virgin Galactic because that's kind of a volatile symbol. But anyway, this move with an entry at 5 is kata number 2, the supported fall crossing. Okay. All right, so this next one is Tesla, and this is a core and turbo. As you know, we got a swing trade on this one. So I'm noticing the sell-off to create the winter conditions. Okay, so we've got that harsh sell-off here from the open. It gives us a, get that out of the way. It gives us a rollover in the RL10. It crosses the baby dragon. Winter turns to spring. we get the RLXD. So I buy it in the usual way right here at a little 439 and some change. I'm using the PSAR flip as the initial risk. This thing rolls over quickly, and I just take it at the PSAR instead of letting it come down a little further. If I had let it come down a little further, it would never have gotten me out, so I would not have taken that loss if I'd followed the Wu-Wei exit. But at the same time, I didn't want to catch a falling knife. So I get darn near bottom ticked here, and then it immediately reverses. The RL10 makes a higher low, so I just rebuy it at the same place that I bought it before and just take my lumps like a man. I want you to notice this excursion, a pullback, and another move up. This is essentially that kata number 2 that supported, in this case, supported summer crossing. So let me draw that for you. So you have a swing low in the RL10. You have a higher low in the RL10. You have that peak RL10 right here. And so I'm buying the first position now in that pocket. And you almost have another one essentially like right there. So a reasonable place to have put a second position on this one. Would be I could see that going right here. Let me mark that as yellow. I could see a second position there. I could also see a second position here because now we've cleared the Z3 pinch. We've cleared the Z3 pinch, and we've cleared the RL270. So either one of those, in my view, would be a reasonable second position. I did not get those in. The rest of the market was selling off, and so I was more cautious today on the long side. So we're taking the Wu-Wei exit and just following the Bollinger Band mean up, and we take the exit here at the Bollinger Band mean. We give back the blue box from the peak, and then we get bottom ticked again. So now we get an RLXD, and I would treat this again as a supported summer crossing. So this is kata number 2, and the way I look at that is here's another higher low. So you have a series of higher lows, and I kind of like that it has taken out the previous RL10 peak. So you get the RLXD and a reversal and a continuation. So I buy that one with a stop at the usual spot here at the PSAR flip, and then just using the standard Wu-Wei exit, we make an R. And so this was more of a grind, and Tesla costs so much it's kind of hard to, the position costs a lot. So I got tired of that one, and I didn't have the willpower to get short this in here. I would rather get short an index or go long VXX than trying to short a strong stock in a strong sector. So we did some journeyman-like trading today in Tesla. I'm going to come back to Microsoft because that one's a little more complicated. I want to go to kata 3, which is the collapsing dragon. And so this is Devon Energy, which was the worst performer today, oddly enough. So I want you to notice we have this Z3 excursion in a peak, and the RL10 rolls over. So now you have a high. You have a leg down that reverses. It comes up, makes a lower high, and reverses. So now if I'm marking this up, The pattern that I'm looking for is, in this case, because I'm going short, a high, 2 is a low, 3 is a lower high. That now makes this a pocket at 4 and a collapsing dragon at 5, or a true collapsing dragon here at 6 in the Z3 breakout. So I played this one with an entry at 5. I wanted to see it coming through the dragon and confirming that this thing was weak, but I wanted to get short before it breached the level at 2. So I'm really getting short in the pocket at 5. I'm using the Wu Wei exit. I'm going to drop it down to the dots and then pick up the Bollinger Band mean. We're going to get out of this thing much later. But now what I've got is first entry at 5. I wouldn't be offended with an entry at 4, but if I got it at 4, I would still put my second entry at 6. Like I wouldn't go 4 and 5 and 6. I would go 4 or 5 for the first position. And then when I see confirmation of a breakdown below 2, that's this. Now you can see 6 is a clear collapsing dragon. So that's where I get that second position in. And then I treat this as a collapsing dragon. This belly of the dragon collapses. So I would treat 7 as another collapsing dragon. So that gets us our third position in. This comes down and then comes up and hits the Bollinger Band mean for a 3 position collapsing dragon, and not much of a give back at all. This was actually setting up for a supported spring crossing and also a supported fall crossing. So we'll get, because you can now see, I hope, we see this swing low, a higher low, and we're getting ready to see it breach here. So we have a low at 1, we have a new high at 2, we have a higher low at 3. So this would be a pocket entry at 4, or if we wait for that to breach the, I would say in this case probably the Z3. You could wait for 5, and then our target would be 6 to get back to the VWAP, and then if you look at the size of the excursion away from the VWAP, then a second leg up would be up to 7 to get back to the previous support level. So that's how we would frame that as a kata number 2, supported fall and supported summer crossing at the end of this thing. So that's kata 2 is the collapsing dragon sequence going down, and then that would lead into kata 1 or kata 3 on the recovery. Okay, so the last one I want to cover today is a combination. This one labeled as three iterations of kata number 2. That's the supported spring crossing. So the first one I want to talk about is the blue series, and then I'm going to talk about the red series 1, 2, 3, 4, 5, and then I'm going to talk about the green series 1, 2, 3, 4, 5. So it's exactly that same pattern again. This is really a legacy from the first generation RLCO. This is that lazy W, or pattern 4, in the first generation of RLCO patterns. But I now think of this as kata number 2. So what we have is we have an observable low, when the RL10 makes a swing low and reverses higher. You could see this entry right here, where the blue arrow is, as like a supported spring crossing. But you don't always take those. You may have other things going on, span of control or timing of the day or whatever it may be. So that yellow dot is where the supported spring crossing would be, and you can see you wouldn't lose money on that trade. So we notice the swing low at 1. We find that swing high at 2, which doesn't surprise us because that's where the VWAP was, and these previous 2 rollovers all happened at that resistance level. So that's not very surprising. And in fact, if you make the entry at the yellow dot, you got to be mindful that is a very logical place for it to stall, and that's why you would cash and make some bank on that little leg. So now that it rolls over at 2 and crosses the VWAP and comes back through the Bollinger Band mean and comes down to Z1, well, that is where we see it make a swing low and reverses higher. So now we have this 1, 2, 3 pattern where we have a low, a high, a higher low, and then what we're looking at is we either want to buy it at 4 or 5. Those are the 2 indicated places to buy. We would buy it at 4 like a supported spring or summer crossing. Notice that you're getting the RLXD and you cross the Bollinger Band mean, so I bought it at 4. I put the second position in at 5 because this was actually one of the stronger techs, and I wanted to get 2 positions in quick. So if I'm in at 5, then I'm looking to get, I'm trying to get this to no lose plus dinner for 2 pretty quick. What I end up doing is just playing the Bollinger Band mean trade on this, the Wu Wei exit, so it's going to look something like that. Okay. So the kata number 2 is blue, 1, 2, 3, and entry at either 4 or 5 would be acceptable. And then off you go. Manage that in the usual way. Now, if you didn't take the blue trade, then I want you to notice that we now have that same pattern developing again. We have a low at red 1. We have a high at red 2, where the RL10 peaks and rolls over. Then we have a higher low at red 3. So you can see that it went from 1 to 3, making that higher low. Okay, so that gives us an opportunity to buy either at red 4 or red 5. So we would buy it at 4 if we were trying to get in the pocket and we're trying to front run a breakthrough of this resistance level. Reasoning that if it does break through, it will do that. And we don't want to chase that. We want to be in here. And then if it breaks through, then our job is to get the risk from here to no lose plus dinner for 2. So red 1, 2, and 3 sets up kata number 2. You enter either at red 4 or red 5. In this case, I added a third position at 4, at red 4. Now, if you didn't take the red trade or the blue trade, in sequence, the blue trade or the red trade, I want you to now notice the green. So now in the green trade, I see a swing low at 1. I see a swing high at green 2, where that RL10 has rolled over. It now pulls back to green 3, and the RL10 reverses, and now it starts going up again. So again, I can buy it at green 4, which is what I did for the 4th position. Or you could wait and buy it at green 5 now that it clears the hump. So green 5 is like an emerging dragon. So is red 5, and so is blue 5. In fact, that's exactly what they are. That's the emerging dragon trade. So you can make an argument that you could get some positions where I buy the emerging dragon at blue 5, a second position at red 5, and the third position at green 5. That's a case where I'm adding positions using the emerging dragons. So this one is uploaded on Patreon. I think it's a pretty good flashcard for you to study that lazy W pattern and how I'm using the RL10 and the RLXD to time those entries. But what I'm looking for is those higher lows, or in the case of the previous trade we saw, the lower highs where it's starting to decline and we're taking collapsing dragons. So that's kata number 2. There's a lot going on in that trade, and so it turned out that the Microsoft trade was really good because we got the I got one entry here at green 4, at blue 4, second position at blue 5, third position at red 4, fourth position here at green 4, followed by a quick scratch on that one. So we made bank on entries 1, 2, and 3, and then cashed everything up here at the Bollinger Band mean, the Wu Wei exit. Okay, so that one deserves a little bit of study. Okay, before I get out of that one, I want to make sure everybody has it. See if that explanation was clear. Okay, any questions on kata number 2? So the actual trade as taken was first entry here at blue 4, second position blue 5, in order to get 2 positions quick. Third one in the pocket as this thing was starting to move out. Fourth one here, followed by a quick scratch. Okay. All right. Let's go to. I'll do a flashcard on that one here at some point this week. I owe you that. Okay, so Tortoise Daily Report. We've already seen the market health check. All right, so we're still bullish normal. We're overbought mostly. We have a few where we're just above average on the 3-day and the 30-day, so there was a little bit of a pullback. ADX is improving to 19. We are still risk on. The volatility is coming out of this market at 1.59, so that's normal. The risk Z is still pointing the way to the upside on swing trades. We have no channeling and overreaction signals. The 10-day max pains, these are the non-tech winners. These are the relative strength winners. Home Depot, Walmart, McDonald's, Caterpillar, and United Health. Look no further. 10-day max pains, these are the ones that are suffering the most. So we saw the weakness in Devon already. Simon Property Group, IBM, and Boeing. And there's oil, exploration, silver, natural gas, energy, and mid-cap energy. IBM, Boeing, Amgen, DuPont, and Walgreens round out the other max pains. So the energy sector is still really suffering. In the Dow 30, we have just a few dojis today. I'll let that come up on your screen. A number of dojis. We have 4 auto framers that test out well. So this is, Amgen, Boeing, IBM, and Merck. We had Goldman Sachs had a breakout on the 10-day and the 1 month. While Disney had a big breakout on the 10-day, and Walmart had a breakout on the 10-day and the 1 month. So non-tech was the order of the day. ETF tactical, half a dozen dojis, and only treasuries test out well on the auto framer. Let that come up on your screen. Yeah, Ken Hum asked me while we're waiting for that on Microsoft, could there have been a Z3 breakout entry? Yes, I think there could have been. Let me go back and take a quick look at that. So yeah, here's a 5 is almost a Z3 excursion, so you could get an entry inside here, I think. Like if you wanted the first one here, but wanted to wait for a Z3 excursion and take this here, you'd be fine with that. Yeah. One of the reasons yellow was kind of attractive was you saw that, here was a Z3 breakdown. I wouldn't be offended if you'd taken that short and then reversed at the RLXD. That would be sort of a normal play too. Did that answer your question, Kim? Let's see. So yeah, that's ETFs. So the auto framer, there are 5 that test out well. So you got Amgen, IBM, Treasuries, Boeing, and Merck. That test out on the auto framer. So Amgen is especially attractive at 5.3 to 1. And I like that treasuries are still 3 to 1 even with today's gains. So that's pretty good. And you can see down here in the RLFF that treasuries are still 8 ATRs below their long-term fair value. So that's pretty cool. Procter and Gamble, 7.5 ATRs above its fair value. So these are all your relative strength leaders right in here. The most ATRs above their own RL270. Candidates for continuations, long side plays, or the preservation of capital. Like if you already had a position in and you were worried about it being overheated, that's why I have these coded in red. I'm much more worried about losing gains than I am chasing things that are already more than fair valued. Daily squeezes, quite a few today pop up because of the relatively smaller range than normal. And you got some goodies in here. You got the mid caps, treasuries, and Caterpillar. Discretionary large caps and small caps. There's technology. So this is a market that is really postured for a sharp breakout based on today's. Today didn't follow through to the upside, but it also didn't sell off harshly. So that makes it an inside day, and that is like a range compression. And that's what we'd be looking for as a jumping off point for a strong move in either direction. Even Apple and Intel are getting into the business here at 2 to 1. Lots of good symbols in the summer, so we're still, featuring a healthy market right now. Mid caps and small caps, and Mexico are some relative strength leaders there. The multi-time frame, multi-NDX analysis. So Walmart, Home Depot, and Disney and McDonald's did the breakouts today. I'll let that come up on your screen. And notice quite a few breakdowns on the making new 3-day lows. 3M especially noteworthy with a minus 50. And gold And silver, big breakdowns today, oddly. Gold with a great big breakdown of a minus 176 on the 3 day NDX. That, to me, feels like a shakeout, testing the weak hands to see if they could be persuaded to give up their holdings. So a sharp move up in gold and silver, and therefore wheat and precious metals, would not surprise me in the near future. So we got this great big smiley face right here. It has rejoined the previous support level. That's where it sold off the last time we were at this price level. So this downward move is not out of the that would not be out of the ordinary. And then in terms of the slope of the RL30, it's at the long-term average, so this would be a natural place for it to fail. And you can see with respect to the percent stretch above the 200, we're getting up near nosebleed territory again. And the last 3 times it was up in this vicinity, there was a big sell-off, a slight sell-off, an intermediate sell-off. So a sell-off here would not be surprising. Would not be surprising. And that's everything I want to cover for tonight. We'll get this produced and posted on Patreon, and we shall see you tomorrow in the chat room.